We all talk about bias, right? But it's so much more than just a social issue. Think of it like an invisible lens that distorts how we see everything, especially in the world of business and finance. It's this hidden force that can totally wreck our best laid plans and, you guessed it, cost real money. So let's follow the money and see just how deep this thing really goes.
So, just how much money are we talking about? Let's kick things off with this number 62%. Yeah, a survey from Information Week found that's how many companies actually lost revenue as a direct result of AI bias. This isn't some theoretical, maybe one day risk, it's a direct hit to the bottom line, right now. Okay, so what exactly are we talking about here? Bias, at its core, is a systematic deviation from what's true. Just think of it as a thumb on the scale, constantly pushing the results in one direction. And here's the thing, it's not just a human flaw. It can be hiding in our statistics, and it can be baked right into the very algorithms we trust every single day. And that brings us right to part one, the human factor. Because you know what? Before bias ever gets into our machines or our spreadsheets, it usually starts right up here, with the sneaky mental shortcuts our own brains love to take. Let's dive into the biases of the mind. This quote, it perfectly captures a bias we've all probably seen in action. Sunflower bias. It's just like Bernhard Gunther from McKinsey points out, people in a group will often just align with whatever their leader says, kind of like sunflowers turning towards the sun. The problem is, sometimes that leader is pointing them right off a cliff. And that kind of groupthink, it can lead to absolute disaster. Just take the story of the infamous hedge fund, long-term capital management. On the left, you see their belief. Hey, we've got Nobel laureates, we've got these genius models, we're basically infallible. But the reality, over on the right, was a nasty case of overconfidence bias. It led them to ignore huge flashing warning signs, take on way too much leverage, and ultimately trigger a multi-billion-dollar bailout. Shows that even the brightest minds aren't immune. So how in the world do we fight back against our own brains? Well, the Economic Times offers a pretty great roadmap, and it all starts with just being aware. It's about things like documenting your decisions so you can spot your own hidden patterns and practicing mindfulness. But here's the key, you can't do it alone. Creating a plan, and this is crucial, getting honest feedback from your peers is absolutely essential. It has to be a real conscious effort. Okay, let's move on to part two and see how this all connects. It's not just about what's going on in our heads, it's also about what's sitting in our spreadsheets. Welcome to the Data Dilemma, where we're going to dig into the biases hiding in the numbers themselves. I want you to really sit with this question for a second. What if your data is already broken before you even start your analysis? What if the very foundation you're building your entire strategy on is cracked from the get-go? This leads us to this massive problem called sample selection bias. It sounds complicated, but it's pretty simple. It's what happens when the data you're using isn't a true snapshot of the world you're actually trying to understand. If your sample is skewed, well, guess what? Your conclusions are going to be skewed too. And this has a very real impact. A study from the Reserve Bank of New Zealand found that in their inflation surveys, certain groups, young people, women, and those with low incomes, were way less likely to respond. And the result? Their data ended up showing artificially high inflation, all because the sample just didn't represent the whole population. This visual here shows you exactly what happens next. See the red crosses? That's your bias data. If you train a model on just that, you get the red line, a conclusion that's just completely wrong. But when you correct for that bias and use the true data, the blue circles, you get the correct dashed line. That is a massive difference in outcome, and it's all because of the data you started with. In finance, this problem can show up as something called backtest overfitting. Now, this is a super sneaky form of selection bias where analysts test so many different investment strategies on old data that eventually one looks like a genius move just by pure luck. But the moment you try it with new real-world data, it falls apart completely. You end up chasing a ghost. So we've got human bias, we've got data bias. Let's move to part three and see what happens when we throw them together and strap on some rocket boosters. We're talking about the algorithmic echo, how machines don't just copy our biases, they amplify them at a scale that's almost hard to comprehend. And the costs? They are staggering. This isn't just about a bad PR day. Look at these numbers from that Information Week survey again. 62% of companies hit with AI bias lost revenue. 61% lost customers. 43% even lost employees. These are real, tangible, and damaging consequences. And beyond the financial cost, There's a serious human cost. That very same survey showed that AI has accidentally led to discrimination based on gender and age, both at 32%, race at 29%, and even sexual orientation and religion. When bias gets automated, so does the harm. A single failure can be absolutely catastrophic. Just look at Unity Technologies. A problem with their data ingestion ended up corrupting their machine learning models. And the price tag for that one single data quality failure? A reported $110 million in lost revenue. That's the power of amplified bias.
Okay, that was a lot of problems. So, what in the world do we do about it? Let's totally shift gears for our final section, Part 4, the Debiasing Toolkit. It is time to talk about solutions and how we can start forging a much clearer lens.
The fight against bias really has to happen on two fronts. On the human side, it's all about awareness and using structured debate to challenge our own assumptions. And then on the technical side, it's about building better processes and checks for our data and our models. You absolutely need both. You need people and process working together to have any chance of actually reducing bias. And here is a brilliant human-centric tool called a pre-mortem. The idea is just fantastic. Instead of asking what could go right, you start by assuming the project has already failed, like spectacularly. By forcing your team to work backward from a hypothetical disaster, you can uncover all these hidden risks and totally shatter that over-optimism bias before it gets a chance to derail everything. So we've seen how bias can infect our thinking, our data, and our technology. We've seen the very real-world costs, and we've looked at some of the tools we can use to fight back. So the final question really is for you. Now that you can see the biases, what will you do to fix the lens?